Hello, hello, hello. So today I was just thinking about the difference between buying and renting, and I was like, did some back of the napkin math, and it seemed like kind of odd. Like you actually make more money if you only rent for your entire life and you never own a house. So, and then I'll just show you the quick math that I was running. So, so this is the quick summary. So basically, if you get a house and after all of the appreciation and all the expenses, this is the return that you get over 5, 10, and 15 years. And if you just put your money in an index fund and paid the regular tax rate, this is the return that you get. So obviously, you just make more money with the index fund. And to give you a little bit of color for what this looks like, so imagine you had a 500K house, you bought it all in cash. So this is a $500,000 investment. And then in this case, it's a $500,000 investment in the index fund. And then this one is $500,000 in a house. And basically, is that if you take the property tax, average home insurance in Ontario, and the maintenance, this is what you end up paying over 20 years. So this is the part that was generally not obvious. Like, oh, this stuff's so expensive. And then basically after 20 years, your house is worth $1.8 million. And then you just lose, you know, almost $600,000 to all of the costs over the years, and to the and then you lose another 90 grand to the real estate agent, which comes out to about 600K. So basically, after 20 years, your 500K investment turned into 1.2 million, which gives you an average return of about 4.5%. And then if we were to look at the index fund scenario, if you invested $500,000 at the average rate of appreciation, so the average rate of appreciation for the average house in Ottawa, which is where I live, basically is here. Uh, so yeah, this is basically like the 10-year yearly return. And then with the index fund, it's about 13% versus 6.6%. So basically, you could be in an index fund, sit there for 20 years, same way you did with the house. You start with way more cash, 5.6 versus 1.8 million. And then with the rent that you pay and the taxes, it is more expensive than the costs of owning a house. But you just made so much more money on the index over 20 years that your net asset value is 4 million instead of 1.2. And then this explains the higher return. So if you go back here, this is how all this stuff makes sense. On the index fund, you just have so much more income or revenue in your investment system. You also have higher cost, but uh, your increase in income is so much higher relative to the decrease in cost of just having a house. So yeah, I basically just realized owning a house is a scam. Never own a house. And basically, if you could just figure out how to invest your cash to get more than 6.6% in Ottawa, then boom, you're kind of vibing, because you just won't. Yeah, like you just won't be stuck with a house that is really hard to sell and is very expensive. If you had your money in an index fund, you get a higher rate of return and you could sell as much as you need at any point in time. So if you have a family emergency, medical emergency, literally anything that happens to you, the stock is easy to sell and you can do it right away. And there are thousands of buyers who would purchase your stock at any second on the public market. So yeah, basically either go find some index fund type thing, or go start some business. Which basically any business you are ever gonna run is gonna give you better than a 6% return. So you should probably do that instead of putting your money in a house. Don't scam yourself. See ya. Also, by the way, I just put the link for this in the description of the video. So if you want to go look at this and then compare that with your own spreadsheet, feel free.